CME just changed the game, and this is what we're about to experience. Micro E-mini futures. Now, any one of you guys who have any previous experience or understanding of financial markets and e-trading, you know that the S&P 500 is one that a lot of people, as far as futures traders, trade, right? Well, one thing that's been keeping people away from trading futures is the fact that there's a lot of risk that comes to it, and it moves pretty substantially. For example, when we're talking about the S&P 500, there's typically about $50 per point. Basically, that breaks down to about 12.50 per tick. Now, again, if you know anything about trading, that's a lot to be risky if you have a small account. It requires less margin and less dollar tick. That's what I'm going to talk about in this video. Coming up. So we're back, we're ready to rumble. So now we're talking about the micro E-minis, right? I already have written out an example that we're gonna talk about. But first, let's just talk about futures, right? Because I've been talking about options on my page, and I don't want a lot of new traders to get confused. Options is one form of trading where we're trading derivatives, right? But you can also trade future options. And future options is you can trade commodities, you can trade currencies. Now, when we're talking about specifically micro E-mini futures, the great thing about it, like I mentioned already, is that you're getting leverage. So you're using less money, less capital to be able to trade the same S&P, NASDAQ that other people are trading. It's just at a fraction, or I should say a tenth of the price. The ratio is 10 to 1 now. So let me just write out some of the new ones that we'll be seeing. So these are some of the ticker symbols that you're gonna need to check out. We have the YM. I think, let me write the ES there. So I'll write these three right here. Now, one thing I do want to stop and mention again is that just like options trading, futures trading, there is risk that comes to this. And I am not encouraging anyone to put live money into these trades. All I am telling you is that this is a possibility if you would like to trade the market and you have less capital, which a lot of forex traders do, and that's the reason why they trade forex. If you want to trade options and you want to be able to hedge your positions, you want to have a little bit more oomph with the way that you're trading, micro E-minis may be a good fit for you. Just want to give that advice. Investment advice, not giving it, but I'm just telling you what you could possibly do instead of trading forex, right? So you have these three that I'm just going to use an example here, and then of course we have the S&P as well. So micro E-minis for S&P as well. That's just a NASDAQ, that's the YM, that's the ES. Now, some of the great things that we love about trading futures is that, number one, the trading hours. When you're talking about the stock market, there's a specific trading hour that you can trade every single day, but the futures market is 24/7. It only closes for like 2 hours every single day. So that's the leverage that we get as far as how much we can trade. But that's not the best part. The second part that we like is the fact that you have more margin, or I should say you have less capital that is required for your margin. So when we're talking about trading the NASDAQ, the YM, the ES, right? I even have the S&P as an example right here. The margin for one contract of the S&P is going to be 6,000. Well, how much will it be with the micro E-minis? I can tell you right now because I know the number off the top of my head. $680. So $680 to trade one contract of the S&P. Now, one thing that we're hoping is going to happen with the micro ES, the micro mini S&Ps, is that there's going to be the same amount of movement that we see with the S&Ps with the micros. That's what we're hoping for. And I think that we can kind of put a good amount of faith behind that because the CME is the ones that's backing it. They've been doing this for the last 2 centuries. So I want to say that we could put a little bit of faith in at least paper trading this and testing it out to see how it moves. So far, the volume hasn't been looking bad. This happened about 2 weeks ago now that they launched the micros. So far, I think the open interest for the S&P that I saw was like 157,000. So that's not too bad, especially when we're talking about the volume. So it's going to be the same with the entry as far as when we're talking about the micros. So it's still, if we were trading, for example, one contract of the mini S&P, let's say, for example, we get in at 2,354, right? That's still going to be the same thing with the micros. What changes, for example, is the margin. Again, this is a tenth fraction of what we're expecting with this. That's what we're gonna see over here. So the margin is gonna be 680, right? And the risk is gonna stay the same. Let's say, for example, we're trading and we're risking 30 points. I'm risking 30 points in this trade. So then now we have the risk. So you have over here 15. Well, what is it gonna be here? It's gonna be 150. That's gonna be your risk if you're trading one contract of the micros. Exit's gonna be the same. Your gain as far as the points is gonna be the same, but what changes is your gain as far as the dollars. So now, if we were to take on this particular trade, but we're trading the micros, this is going to be 2,185. So again, it's just a tenth of the price. That's the reason why this is going to give a lot more people leverage when we're talking about the market, right? So we talked about the margin, we talked about the trading hours. Now, another great thing that, one of the things that I feel like is gonna revolutionize possibly forex with these micro e-minis and even possibly options is because now that you have the micros here, you can hedge your positions if you still want to trade the minis. So if you're a futures trader and you trade the S&P right now, well, guess what? Now with the micro e-minis, you can hedge your positions easily. If you're doing a bullish trade over here, we'll do a bearish trade over here. Yeah, you may have to up the contracts, but you're able to still now trade that ranging market that I like to talk about with options. And one thing that I will say that makes it kind of an alternative per se to options is that now you don't have to worry about calls and puts. If you just want to trade ranging, if you're just trying to get a neutral stance on this market, you can trade the S&Ps here and then you can hedge your position with the micros. You can even scale in with the micros. You can do a lot of different strategies with it. And that's the reason why it kind of did change the game when we talk about what futures traders are going to be able to do. Now, this is just a piece of it. This is just the half that we're starting to, find out about the micros. Another thing that we're going to talk about in the next video is the tax benefit. And then I'll also go a little bit more in detail on some of the strategies that you can do when we're talking about trading this instead of trading options or using this to trade options. We'll talk about those two in the second video. But first, just want to make sure you get the overall contract down and the numbering. So 1/10 is basically what we're seeing. We're seeing that 10-to-1 ratio when we're talking about the micro e-minis compared to the e-minis here. So I'm gonna have another video on this coming up right after this. Make sure to stick with Talkin Options and always get your money right. I'll see y'all later.